Okay, this is a review for the Live Trade Signals room for Friday, September 21st, 2018. Just a quick recap, the Live Trade Signals room is a one-way chat. We do this so that you don't have to sift through hundreds of different comments about somebody's weekend or a football game or basically just a bunch of chitter-chatter that does nothing to help you make money. So this has turned out to be very effective. And the posts that we make are very direct. And so what I'm going to do is walk post by post. It's very quick because there's not a lot of posts. What we do in the Live Trade Signals room, and pretty much everything we do, is just focus on price. We don't fumble around with indicators. All the market cares about, when you really boil it down to, is price. Since I began trading in 1995, after all of these years, everything I've ever done, the hedge fund managers I've been trained by, and everything that I've ever come across that has resulted in money, making money, real money in the market, has come down to price. It wasn't some magic indicator, it wasn't a MACD crossing or a plethora of other things. It comes down to price. And so that's all we focus on. So what I'm going to show you here is the market calls that you'll see in the left by this screen here. All of these are time and date stamped. I'm in Mountain Time, so if you want to match these up with your charts, you can do that by just simply looking at the time. You don't have to do that because I'm going to walk you through it, but it's very simple. So the first post was just a simple good morning, and then 2 minutes before the market opened, 47.5 or 50.25 could be some resistance for a pullback. So aggressive selling there, obviously pretty strong uptrend so far. So that's what we're looking at right here. Here we are at the 728 candle. So what I'm going to do as a trader is I'm going to put these price levels onto my chart. I've already done that, so you don't have to watch me put lines on my chart. So what are those lines for? Well, they're for selling. Now, what you'll notice is that these price levels are incredibly accurate. What that means is that they will often go to the tick. And because they go to the tick a lot of times, we want to make sure we get filled on these trades. And so the only way to do that, unless you get really lucky and the price goes to the tick of your exact order and fills you, it's not going to happen every time. And so what we like to do is put our orders 1 or 2 ticks in front of each of these levels. So if we're buying, it's going to be 1 or 2 ticks above. And if we're selling, in other words, shorting the market, we're going to be 1 or 2 ticks below it. That's it. Simple price. We place an order and then we wait for an exit. It literally is that simple. Okay, so we know that if and when price gets there, we're going to be selling. 42 is conservative TSP if you sold. So that happened 2 minutes later. So let me fast forward this 2 more candles. 1, 2. Okay, so if you got into this trade, now we got 2 ticks away from it. Some traders, what they do when they see the price, they just hit a market order entry. So it's very realistic that those traders would have been filled. Obviously, if you had a limit order 2 ticks below that, you may or may not have been filled, which if you were not filled, it was unfortunate because that was the high of this particular day. That aside, this was a valid trade. So once we are in that trade, if you sold that, where do we get out? Well, we're going to look to this next post that was posted 2 minutes later, 42.0. So what you're going to do is you're going to put a line on your chart. I've already done that, and you'll see that in a second here. Is a conservative TSP. That's what that means. We abbreviate a lot because we're actively trading while we're doing this. Okay, and so what that means is that you're going to, if you took this trade, think about possibly taking some profit. TSP stands for take some profit. Now, if you want to completely get out of that trade, that's perfectly fine. Obviously, if you're just trading one contract, you have no choice but to get out of that trade, unless of course you decide to do your own thing and get out whenever you feel like you need to get out. But this is a very realistic place to take some profit at 42. Okay, so 2 minutes after that, 40.75 to 39.25 is for buying. Now I'll fast forward the charts in a second here, but if you are trading multiple contracts, let's say you took off 1 or more contracts at that first target, which you'll see in a second here. If we're going to be buying at a price that is where we're going to want to completely get out of the rest of our positions. Okay, so that post was posted 2 more candles later, which is right here. Remember, because these prices are highly accurate, we're going to want to be 1 or 2 ticks above if we're going to get out of our positions. Okay, so at 42, the low on this one was 42 1/4, so 1 tick higher. Now that's at this point in time. Okay, we don't know what the market's going to do yet. So if you're a couple ticks in front of that, then you took profit. So you've got 4 to 4.5 points, depending on your fill price on your market order on the first short here. Okay, that's how much that went for. Okay, now the next post, so that was at 32. We're 2 minutes. So for me, the market opens at 7:30, and we're 2 minutes into market open, and we've already banked over 4 points. Okay, anyone could do that. You have a price for selling, you simply sell it. You have a price to get out, you simply get out. That's it. Okay, no indicators, no squiggly lines, no drawing chart patterns. Not opposed to some of those things, but it's completely unnecessary. Okay, so 8 minutes later, if we look at the next post at 7:40, 45.5 is Globex high, so if we take that out, probably up to that higher price. So let's see what was going on to find out why we would say something like that. So at 7:40, which is this doji candle here, the reason why this was posted was because at 45.5, since that's the high, which is about where my crosshairs are. Now I'm not going to put a line in there. If you feel like putting extra lines in there, that's perfectly fine. Just make sure, depending on what chart software you use, I use TD Ameritrade almost exclusively. I do use NinjaTrader. It doesn't really matter. You can use Sierra Chart, you can use multi-charts. It doesn't matter what software you use for the trade room, because it's just a matter of buying and selling. So if you want to put that line on there, you can. I tend to not have extra lines like that because I want to declutter my charts as much as possible. If I feel like I need to pay attention to that, I don't want to forget about it, then I will put that price in there. Okay, so what we're saying here is that if we have success to the upside above this price, 45.5, right where the horizontal line of my crosshairs are at, we are going to hit that 50 1/4 line. That there's a very good chance that that's going to happen. So does that mean that the market will do that? No, of course not. What we're saying is that if price closes above here, we continue to set higher highs and higher lows, there's a really good chance that we're going to hit our 50 1/4. And what do we do if and when we get to 50 1/4? Well, we're going to short that because that's for selling, right? Okay, so all the way at 8:23, so quite a bit later, we got 43 minutes later was the next post. So 45.5 is the Globex high, and 40.75 is yesterday's high. So let's see what was happening at the time of this post at 8:23, and then between this point and then we'll talk about what happened there. Okay, so as you can see, if you didn't get out here for some reason, and if you held it, you can consider yourself lucky. And if you didn't get out here, then you obviously would have been filled on this for profit at the 29.42 level. Okay, so this is what happened between the last post. Just we're not breaking highs, we're not breaking the low of the day. We're just kind of sitting in back and forth in this channel. So then at 8:23. 40.75 is yesterday's high. Taking that out is probably going to bring in a bit more pullback. So what that means, so remember back up here, 40.75, and we're down to 39 1/4 for buying. Okay, so what I like to do is put my buy entry lines one color, my sell entry lines another color, and then profit targets are always green. Obviously you can use whatever color you want. So what this means is that we are going to look for this to have succession to the downside. We can test it to buy. It's for buying. Okay, so you can buy this. You'd obviously be filled on this candle and at very least on this candle. And so if we go to the next post, 39.25, again, as was posted right here, is your last chance for buying, and that was posted 4 minutes later. Okay, and we got to the tick. So you would have been filled on this one too, and or this one. So whether you took this one and or you took this one, obviously you would have been filled on both. Now some people ask, well, what about, let's say you're in this one and this one did not stop you out. Do you get back in? Do you add to your position? That's really up to you. Personally, I've been using these price levels since 2007. It's something I like to do. I like to add to my position as long as I feel confident about the position that I'm in. And some people do not like to do that. It's really up to you. But historically, I have found an exponentially greater profitability by doing that than to not add to the position. Now, does that mean that I win every single one of those trades? No, of course not. And when I do lose a trade like that, obviously I'm going to lose more money. But overall, if you do some simple math, if you add to a winning position, obviously it means more money. Okay, so that's the last chance there. And then the next post was posted at 34, so 7 minutes later. Let's go to that one real quick. Okay, so that was posted here at 8:34 my time. So if it breaks, the break is most aggressive sell, but 37.25 is right there, which is right here, and then 35. So what I would do is I'd put these prices in there if you haven't already. What I did is I put in this price level to watch for a break, and I made a note there to watch for a break. So what that means is that I'm going to want to watch this price if we do get down there, or when we do get down there. I'm going to watch for price to have strength below this level. Okay, the next level I'm going to put in is 35, and then there's also a price given at 32. So what that means is that if we're going to break these levels and hold, these are the next targets. Okay, so essentially what you could do, as long as there's strength, is potentially trade a breakout there. But we're not done yet. We're not to that yet. In real time, we're potentially long once, if not twice, and this trade's not over yet. Okay, now you may have taken profit here. Here's something that you can do. Let me make this a little bit bigger so you can see it. So for those that don't have a lot of experience, and but you do have a big enough account to get in twice into a trade, long here and then long here. One thing that you can do as you're starting out, and it's not necessarily a bad advanced strategy, it really depends on how fast the market's moving, is you can get into the long position, and if and when we get to this original position, you can potentially break even and then just take profit on that long position here. It tends to help calm traders down a little bit, those of you that are still working on your emotions while you trade, and it allows you to bank profits. Okay, so that's something that you can do if you're in two separate positions that are kind of like this, one position up here, another position down here. Break even on your long position, or take a tick loss and then make money on your second position. So overall you're in the green. So you're potentially flat on this trade. Remember, this TSP was from the short up here. So one of the things that you can do, if that throws you off, you can take that line and just either get rid of it, or you can stop it, just select a different end time. It just depends upon how you like to have your charts. Okay, so the rest of this post, so that's for short. So we're basically looking for this to be breached and have succession to the downside, which means that candles are closing below it. Our next targets are 35.5, and it could get to 32. Now above, because we are long at this time, we have 42. Okay, so there's that 42 level, and then we have 43 and 45.5. So you can put in prices at 43.5 and 45.5. Okay, so as the market progresses, a few minutes later at 39, which is actually right there, there was the final post of the day made, and that is really up to you where to TSP. So again, take some profit on this buy, but what is up there. So what that means is that nothing has changed. this is, everything has been mapped out for our plan to initially short the market from the beginning, take profit down here, go long again here and here. Okay, so everything is already mapped out. We already have the downside scenario. We're looking for 37, what was that, 37 and a quarter to be breached. We need success there to get any shorts. But if you look at this time frame, an hour and 9 minutes, the whole room and the entire day really is planned out. So if you can be done at that point. So over 4 points on that first one, maybe you broke even on this second one, depending on your fill, about a point or so on this line here. If you held it, obviously, we don't know what the market's going to do yet. But as the market progresses, it just kind of sits sideways for quite a while. It got a tick away from this upside target, which would have filled you if you follow the 2-tick rule. As I explained earlier, it went to the tick of that price later on. It just kind of was dead for a while, low volume, just kind of sideways, and it did reach our upper targets. Okay, so if you stuck it out and you held on to it, obviously you would have made some really good money there. It took a long time for it to happen. And then the market just kind of goes sideways. It does decline back to our levels again. People ask, can I buy these again? Yes, of course you can, but you have to realize that the more you buy a line again, the weaker that price level becomes, because when it hits a price level again, it becomes weaker every time it gets hit. And so you do run that risk. And so in other words, it just becomes riskier. It doesn't mean that you can't do it, because you can. Obviously it worked really well. In fact, you could have done it several more times. But at some point the market's going to become weaker if it keeps hitting level. Now, if you look at down here, this was the price level that we're waiting to break. So we closed down here, but the very next candle could not breach this low. So it went back and forth and back and forth and back and forth for 6 minutes. And a lot of times we have this 5-minute rule that if you're in a trade on one of these prices, and as you can see, they're very accurate, and within 5 minutes, if the trade's not happening, it's probably not going to happen. So if a breakdown is not going to be successful, it's not going to happen. So if for some reason you traded that, then you had 5 minutes to get out of the trade, break even, and just wait for a better opportunity. Okay? Back and forth, and it just sits there forever. So this was the sell target, if you remember from the prior post, the 35.5. So if you had the patience to sit through all of this garbage, it did hit the target eventually, but this can be quite painful for a lot of people. I mean, you're going to be in this thing for an hour, and it's moving 2 ticks at a time in a lot of the candles. Okay, and this is a minute chart, by the way. I do a minute chart so you can see the time easier. Okay, and we're back testing this line. So one of the things that I like to do is, if support has been broken and it reaches another level, if it comes back up to what was once support, the chance of it being held as resistance is very, very strong. And so we can see that here. It actually happened twice. So you technically could have gotten that trade several more times. And then as we can see at the end of the day, we actually got to the tick of that lower sell side target. So if for some reason you did trade this and or this, then we eventually did make that target. So difficult to say points for the day. I mean, you have at least, depending on your fill price, if there was maybe a delay or maybe you didn't get into the second one, but you most likely got into the third one, you have at least 4 points, if not 5. And then there were several more opportunities to get in on the same prices where, these prices don't change. And that's one thing that you like about these price levels that we give, is that they're good for the entire day. And then it's just a matter of getting in on the trades and then taking profit where you're supposed to take profit, and then wait for the next trade. Okay? So all of these price levels were given many, many, many hours, in fact, the beginning of the market, in advance of price even reaching these levels. And we do this every single day. Well, usually 3 to 5 days a week. Most weeks it's 5 days a week. But if there's a holiday, obviously the market's closed, they're not going to be posted that day. And then every once in a blue moon, we're traveling or whatever happens, we can't post that day. But just about 5 days a week, you'll have this exact scenario, obviously just different prices. Some days the market moves a lot more, other days the market moves a lot less, but these prices are extremely reliable, and we don't have to fumble around with indicators or squiggly lines and clutter up our charts. It's just simple price. We know where to sell, we know where to get out, and that's it. So in the description below, there's a link to join us, and we'll do it all over again tomorrow.